This is another episode of me documenting the day-to-day process I am taking to achieve long-term consistency in the financial markets. And today is another red day. But if you look at my calendar, you can see that my red days are getting comparatively smaller relative to the other red days that I've had this month, which tells me that I'm dialing in more. I'm focusing on managing risk better, but still lacking in some areas. So we're going to dive into those areas that I've lacked today. But today the market did exactly what I was looking for, delivered the exact level that I was looking for, but I still wasn't able to capitalize on that movement. So I've had 3 trading days where I've gone into each day and I've framed what the market was going to do. My market approach was correct on all 3 trading days, but only one trading day was I actually able to secure some equity. So we need to figure out what is going wrong there. What is going wrong there? Obviously, I'm experiencing some losses. There's growth in that because every failure carries with it an equivalent seed of success. And if you think in negative terms, you're going to get negative results. If you think in positive returns, you're going to get positive results. That is a law that governs the life of everybody. Doesn't matter who you are. You become what you think about. And that is a law. It's a phenomenon that governs everybody. So I'm going to look at this red day and I'm going to refuse to think negatively about it. And I'm going to think positively about it only. The market still gave me what I was looking for. My approach was correct. What does that tell me? I'm growing in my ability to come to the market and frame opportunity. Now today I just struggled in timing that move because I was unaware of the economic calendar and all of the events that were on it. Look at the economic calendar. Where is it? Here it is. Look how many events we had on the calendar. And you notice how many different events we had after the bell after 9:30. We had 3 drivers coming out after 9:30. So what does that mean? That means at the bell I should be patient and I should wait for those events to transpire before I look to engage. Because if you trade in the first 15 minutes market open, you know that I was extremely violent. Let's go look at the chart real quick. Look at this whiplash price action, up, down, up, down, up, down. You see all these large candles coming in, but there's no direction. So nobody is safe trading that first 15 minutes of market open. Shorts are getting stopped out, longs are getting stopped out. Nobody is safe. And I got stopped out twice in the first 10 minutes of market open. So I'm noticing that I do have a tendency to kind of spoil sessions very quickly into the open. I feel a bit of tension, I guess you could call it, at 9:30 because I do have some solid setups that happened right at the bell. And today, based on how the market set up, I was looking for that move to happen early into the open. And it didn't do that because of the economic calendar. Now, I looked at the economic calendar before today, but I lacked awareness of all those drivers intraday. I saw that there was a lot on it. I didn't really think anything of it while I was actually trading. And that is where I went wrong today. And that is how I mistimed this move because if I simply wait for all of them to transpire, this setup is so easy. And it's exactly what I was looking for at the exact level I outlined in my pre-market plans. So let's break it down. View my day. All my processes and all my systems are integrated into one solitary system on TradeZilla, and it's extremely efficient. Okay, so something that I've just added today because this is extremely important. I got this from JadeCap. I'm sure you all know who JadeCap is. He took like a $2 million payout. I watched his video on his 7-figure trading routine, and I'm just implementing that within my own daily regime. And he puts emphasis on how you feel because how you feel is going to influence those times where you go on tilt. You go on tilt and you give everything back. So let's review how I felt today. How I feel. Why swim against the tide? So if you've been trading recently, you know the near-term condition is clearly bearish. But today I was bullish, but there was logic behind it. My model told me to be bullish today, and it still delivered. I didn't get the close of the daily candle correct, but I don't have to. I don't have to be right to make money. Another thing that I'm stressing recently, another thing that I've been struggling with recently, because I've been demanding that the market deliver exactly what I'm looking for every single trading day, and that's been costing me. I've been taking solid setups that come back on me because I want the market to deliver exactly what I'm looking for. So today, I felt a lot of indecision about what could happen because of how yesterday's settlement in the market criteria overnight, but I don't want to swim against the tide, meaning I don't want to fade what the market has been doing in the near term. And there's also Jackson Hole starting today, but a huge event tomorrow. So how is today likely to paint? And then my bias, I just felt stupid about it. I didn't feel confident at all, which means there's a lot of room for error and mistakes. This is how all terrible sessions start, which is a fact. All my bad trading mistakes start with a bad market approach. That is where it starts. And all my good sessions start with a good market approach. And it all comes down to, am I able to submit to one idea and have confidence in one idea and just follow through with that? Or do I come to the market with indecision, frame two ideas, look to be a buyer and a seller at the same time? And that leads to all kinds of mistakes intraday. That is how all my bad sessions start. Now, I knew I was feeling indecision today, but I went with what my model was telling me to do, trusting that. And I actually held conviction in it after 9:30, and I still executed on it when the market gave me what I was looking for. But I did not reference the economic counter. I wasn't aware of all those drivers, and that was a mistake that I made today. So what's the draw? What's the draw on liquidity? I want to aim for the next new day opening gap. That should be a strong pull of price above that Asia and London high. Oh, and above that, Asia and London high. So I was looking for the next new day opening gap first, and then if it gets there, potentially Asia and London high. So what is my bias? The higher time frame narrative that I'm establishing is the near-term condition is clearly bullish, but because of the high impact driver tomorrow and how market criteria is set up in the overnight session and how yesterday's candle settled, I'm not leaning toward another large down day. This could be a slight retracement that sets up the next large down move on Friday because market criteria isn't really contingent with lower prices. And so the market criteria is Asia and London highs are left uncontested. They're left intact and price is setting up really low in the day. So this is something, when the market sets up like this is one of my buy playbooks. When we have a discount gap opening and this is presented in the overnight session, that usually leads to a solid buy day. So because the near-term condition is extremely bearish, and you know this if you've been trading, but the market criteria is not setting up to set up lower prices, those don't agree, and how yesterday's candle closed on the daily time frame doesn't really tell me the market is weak. I was indecisive because being bearish felt like that's what I should do, but my model tells me I should be a buyer in the morning session. So that's why I felt that indecision, and that's why I felt stupid about this bias, because my model was telling me to be bullish, but the near-term condition is bearish, and I just feel like I should be bearish because that's what the market's been doing. But in reality, my model is telling me to be bullish, and if I trust that, there is a solid long that has afforded at 10 o'clock. So I'm just going to refer to the 15-minute annotations that I had before the market opened. You can see that's timestamped at 9:24. I'm just going to read these annotations real quick. So the nested new day opening gap could be a strong pull. So I'm looking at this level right here. This is a nested new day opening gap, meaning it's just a new day opening gap inside of another new day opening gap. And I'm noting how these highs are left very, very smooth. So it's going to be buy side above those highs. This is the exact levels that I look for in price to target. And I'm noting how the market's opening near the low day. It's setting up really, really low in the day and a discount relative to the previous daily range. Here's Wednesday daily low and Wednesday daily high. It's opening in a discount of that level. I'm noting how it's failing to leave the hourly CIVI right there. And it's trading below the midnight open. The point of interest that I'm looking for to frame reversal is that daily wick on the daily time frame. So now let me go to the chart and explain the logic behind everything that I'm looking for. Okay. So obviously, Monday, indecisive. Tuesday, large down candle. Now I'm thinking the high of week is probably in, right? But how Wednesday closed, it did not settle near its low. If it settled near its low, I'd easily be looking for lower prices today. But it left this huge discount wick. And we have Jackson Hole tomorrow. We have a Powell event tomorrow. And then the market criteria on top of that, how it's setting up, is not really contingent with lower prices because it leaves the buy side above these highs intact. It drifts lower in the overnight and pre-market session, and it opens near the low day with the discount gap opening. And we have new day opening gap above, and it's trading below the midnight open. So I'm mixing those two variables together, noting how yesterday's candle settled, noting the market criteria in the overnight session, and although the near-term condition is bearish, how this is setting up at 9:30 is telling me to be bullish in the morning session. This is my model. This is what I look for. So if the market has a discount gap opening and it sets up like this, it presents this market criteria, and I have how yesterday's candle settled with a large discount wick, I have a valid reason to be a buyer today, even though the near-term condition is bearish. So that's what made me feel indecisive about that bias. But if I trust it and I submit to it, it delivers what I'm looking for, right? You can see that in my pre-market plan. When the market's down here, I'm saying the next new day opening gap could be a strong pull, meaning I'm looking for that level. So I'm only looking for longs. I'm only coming to the market looking to be a buyer or a seller, never both. Because if I do both, What's that going to lead to? It's going to lead to me switching my bias intraday. It's going to lead to so many mistakes. That has cost me so much in the past. And I also picked this up from Jade Cap's video, watching him break down his routine. It's the same thing he does. One idea, that's it. That's it. And even he has said it himself. Switching bias intraday has cost him so much money in the past. I'm done doing that. I'm done doing that shit. And I've been repeating that mistake so many times. If you watch my videos, you know this. So where did I go wrong? Well, I went wrong trading the first 5 minutes of market open, and I lacked some details. So basically, if we review my losing trades today, the problem is I stopped out in the first two trades, and I stopped out in the first two 5-minute candles attempting this long idea before the drivers came out, before the market engaged yesterday's sell side, and before it engaged the daily wick consequent encroachment. That was my problem today. So simply mistiming the move, unaware of those drivers, and also some additional details that I left out. Like, for example, you see how this is the 15-minute chart, right? So I took two losing trades, two losing longs within this 15-minute candle, mistiming the move. This low comes just shy of that low. So if it's coming just shy of that low but not taking it, like it does right here, that's priming of sell side liquidity. That means it is not valid for me to be a buyer when the market trades down near it but does not take it, moves away from it, because that's priming of sell side liquidity. I want to see that level become engaged, but I did not have this level annotated on my chart. If you look at my pre-market annotations, let's go to the daily journal. You can see I did not have that level, that sell side level, annotated on my chart. So there's one missing detail. Number two, as I stated in my pre-market plan, I want to see it. I want to frame a reversal off of that daily wick. See, I have it annotated right here, daily wick in blue. My annotation's in this blue, meaning that's the point of interest that I'm looking to frame the reversal off of, and I'm annotating it as daily wick. So I'm looking for the market to reverse off of this daily wick. I also get long before the market engages the consequent encroachment of that. So I never see any respect of the daily discount wick until 10 o'clock. You see we have the first test of it right here. Boom, produces a large move. Still waiting for the 10 o'clock drive to come out. Comes back down, takes that low, trades down, but still closed above the midpoint of that wick. That is a sign of strength. We have this large up candle that comes in, overlaps these down candles, and I can buy those down candles with a stop loss below the mean threshold and target my draw on liquidity. So there it is. This is the setup that I should have taken. However, I found myself struggling in the first 10 minutes of market open, catching this idea here, because what I was looking for, let's go back to the daily journal. So how was it going to get to the draw on liquidity? So we had two consecutive down days, right? We had two consecutive down days where the market just left at 9:30. It was so easy, so clear. I'm sure all y'all took it. It was easy. Usually when we have something like that, when the market just breaks lower and instantly gives us it up at 9:30, on the third day, the market tends to do something similar to that at the open, but it's fake. It's not the real move. So when it's doing that, it's kind of like setting the snare, a trap for retail traders or newer traders, unexperienced traders that just see that and see that that's what the market has did over the last 2 days and think, oh my God, it's going lower. It's doing that same move exactly at 9:30. So I'm saying they could do something similar to the last 2 days as a snare where it breaks lower at 9:30 to trap in retail short, deliver a deep discount of PDR, previous day range, and come back inside the range for the nested new day opening gaps. That's what I was looking for. I was looking for the market to break lower at 9:30, mimic what it did over the past 2 days. If we look at 9:30 yesterday, see, same thing, large down candle right at 9:30, and the day before that as well. We have large down candles right at 9:30. What did I even just say there? Keep stumbling on words. And the same thing today. So sets the snare. Boom. Now when that gets overlapped, the first long that I take is on this gap right here. Boom, boom, right there. So this gap becomes an inversion fair value gap. I like how it pushed back inside the range with speed, with aggression, with speed, distance, and magnitude. The thing is, is this is really high up on this range that is created, right? So this first long is in a premium. So I get quickly stopped out on that. I reset my paper trading account so I don't have the executions, but I can show on TradeZella. That's why it's important to collect your data. I'm gonna open my layout. There we go. Let's go to 1 minute. So I think this might be the second trade. Let's see. Let's go to the first trade. No volume. Fuck volume. Time and price. Wait for it to load. There's a storm rolling in. So first trade is executed when the market has this large up candle, overlaps this down candle. So I'm thinking this is the trap. Boom. But remember, it did not engage the overnight sell side, right? Did not engage, or previous day sell side, previous day PM session sell side. It did not engage this session liquidity right here. So that trade is not valid because what is this? This is priming of liquidity. Now it's only valid for me to engage the market long once it delivers this level. I don't want to see it come just shy of its stop and turn back inside the range and take that as a long. No. I need to see it dive below that. So this right here could potentially be a long. This would have just been a stop out. I would still be in submission to my idea and catch the second opportunity, the real move. So I take this gap, quickly stop out on that. And here I thought I was just executing in a premium. So once the market rebalanced this range quickly on the following 5-minute range, I annotated that 5-minute wick because I liked how this candle dropped below, took that low, closed back inside the range, left this large upper wick. I thought at this point in time, it was going to go straight from here towards that new day opening gap that I mentioned in my pre-market plan. So when it rebalanced that 5-minute range, it did not even trade to the midpoint of that wick. I went in at the market on this candle somewhere around here, and I targeted the new day opening gap, never delivered. It was not valid to buy this market until after the news drivers came out, and that's that. That's it. So it's just simply an issue of mistiming the move, not aware of those drivers. And this just also highlights the tendency that I have to execute really, really fast into the open because my best trades that I've taken this month and the last month, they always come right at 9:30 based on certain market criteria that presents itself and certain setup that just repeats over and over again. It tends to happen right at 9:30. And this was one of those days where the move tends to happen at 9:30, but just because of what was on the economic calendar, it's not likely to happen today because we have all those drivers that are coming out, right? So you have to wait for those drivers to come out. So other than that, I didn't really do much wrong today. I came to the market looking for one idea. I followed through with that plan. I executed on it twice. I mistimed the market. At this point in time, it looked good. You know, I thought I was just going to run right up for that. Turned on a dime, rejected consequent encouragement of the opening range gap, came back, stopped me out. So I'm getting better, and I'm getting there. And as I continue to study and develop my model, I get more and more confident with it. So obviously today I had a valid reason to look to be a buyer in the opening range and trading counter trend. Although that is always lower probability, I had a valid reason to do so, so I did. I just mistimed the move. But as I continue to study my model, and I'm putting all the pieces together, everything, all the knowledge that I've accumulated of my model and exactly what I'm trying to do, and I'm visually representing it in Miro now, and it's really helping me understand everything, like all the market criteria that I need to see to anticipate each playbook, the higher time frame narrative that supports each market criteria that leads to a specific move intraday, and just visualizing everything. Now this has actually really helped me understand exactly what it is that I'm trying to do. And it's very simple. The market has a gap opening. It's either going to gap up or it's going to gap down. And I'm going to look for the market to fill that gap or reject that gap and continue in the same direction of the gap. That's it. It's not complicated at all. Although I know it looks complicated, I am just doing the most to understand this to the best of my ability. That's it. It might be overkill, but guess what? I don't care. I think that's what I need to do. If I feel that I know that this is what I need to do, I'm going to do it. I always trust my intuition, and I always just go with the flow. I like to know everything too. I'm extremely analytical and I'm extremely technical. I think that's why I resonate well with ICT and ICT concepts, because they are extremely technical and they are way more advanced than they have to be, and they do complicate things, but I like that and I enjoy that. I enjoy the complexity. That's just how I am. That's just my nature. So, getting better consistently, as you can tell, despite the red. On yesterday's video, we reviewed why I was experiencing a lot of this red and why I'm having a better trading week this week. And that was simply because the slight tweak that I made in my routine. I'm now prioritizing sleep, I'm prioritizing stress management, and I'm able to make quality decisions. Now today, the decisions weren't very quality. They weren't extremely quality. Matter of fact, I felt stressed as I was executing this idea. If we go to the daily journal, you can see, like, how did I feel? Or how does swimming against the tide make me feel? So when I'm trading counter a trend, how does it make me feel? I felt on edge the entire time. Trading against the trend, I feel really stressed out, like the idea is going to fall apart at any second. So I was definitely on edge in both of those longs. And that is just simply because I'm trading against the trend. And I know that I am unaware of that. So it kind of puts me on edge. Now, besides that, I'm just going to keep doing what I've been doing, because I just keep getting better by default. That's it. Now, I'm down a lot this month, but I think I 100% feel confident in attempting an eval either next week or next month. Just because as I continue to put in the work day in and day out, I get better by default. And I talked about this yesterday. All you have to do is hold a goal before you and work steadily towards that. As soon as you put your goal on paper, it's already yours. Now you just have to intentionally act towards its fulfillment. That's it. And that's all I do. There is no hoping. There is no wish. Ever since I started this trading journey, I've known that my success is guaranteed, simply because I have faith. If I didn't have faith, I wouldn't be persistent in my work. If I didn't have faith, that I didn't believe that I could actually make this work, I wouldn't be consistently uploading YouTube videos every single trading session. I wouldn't be working on it every single day. Your work is directly correlated to the belief that you have in yourself that you can make it work. And that's it. And I'm making it work. And I know that I'm handling these losses a lot better mentally too, because I continue to mature. But I'm okay with taking these losses too, because I just understand that each loss that I take is a stepping stone that's going to increase my understanding with my model. Because I'm just growing comfortable with my model. That's all this is. This is kind of like a training phase, you know? Once I get this down, and once I'm able to consistently execute it on it and minimize drawdown and minimize the mistakes that I make on my end, then that's profitability. And all I want to do from this is just produce consistent income so that I can feed myself and my girlfriend, and that is it. That's it. So I'm no longer broke. Define broke. Being broke is being dependent on somebody else for life's necessities. And I'm currently living under my parents' roof, so I'm dependent on someone else for life's necessities, right? How am I going to fix that? It's this, but it takes time. Everything will come if you just wait. Understand that. Another law. Another principle. It is coming. I just have to wait and act towards it consistently every day. That's it. And I can't fail. And you cannot fail. Fuck the statistics. Fuck the statistic that 95% of traders fail. You better put yourself in the percentage group that is the 5%. And you better do what they're doing. That's it. Talk to you tomorrow.